As we discussed the support and resistance in the previous lecture, and at the last we understanding the tools, or we named out the tools that we are used to ascertain the important support and resistance zone. The top and bottom, the first tool that we are discussing in support and resistance is top and bottom, that we already discussed in the previous lecture of support and resistance, where we can identify with the naked eyes on the historical chart to get the top and bottom, where the price reverses from support and resistances. Then another two tools, that is moving average and trend line, we discussed in past few lectures. Now we discuss the lecture number 21. The tool that we are discussing in detail is Elliot wave. What is Elliot? How we can use it? What are the benefits to get this? How the support and resistance is done with the help of Elliot wave. We understand the Elliot wave in detail. So now we discuss lecture number 21, Elliot wave. If you are a positional trader or an investor, then Elliot wave is most important tool to ascertaining your support and resistance. The Ralph Nelson Elliot developed the Elliot wave theory in 1930s. He studied the crowd behavior trends and reverses in recognized patterns, and such patterns are called as waves. Elliot wave are advanced version of trend series. In the prior lecture we already discussed about trend series. There is an uptrend or downtrend or maybe a sideways trend. Elliot gives the new definition and the importance to trend. Elliot proposed that trends in financial prices resulted from investors' predominantly psychology. He found that swings in mass psychology always show in the same recurring fractal patterns or waves in the financial markets. In simple language, the resistance which occur in historical data is again become a resistance in the future price movement. That means the prior also the mass psychology give the resistance, and in the future also the price movement is give the reversals. That means mass psychology is again reacting in the same way that it react in history as well as future. Elliot defines the wave into two categories. The first category is impulsive wave and the another category is corrective wave. The impulsive wave are those waves which net travels in the same direction. That means in the prior trend is positive, and all waves that are move in a positive direction are called as impulsive waves. A corrective waves on the other hand, which net travels in the opposite direction of the main trend. That means that if the prior trend is upward and all price movements that are gone against that trend is called as corrective waves. The accumulation and the participations always be high in wave patterns, whereas profit booking or distributions are shown in corrective waves. It means if I pick a particular impulsive wave, it will be very helpful for me that the mass psychology is come with me to achieve my targets, where the counter waves will identify as a profit booking opportunity or opportunity for buying for those investors who are not picked the previous impulsive wave. The whole Elliot wave pattern is identified by total 8 waves, out of which 5 waves move in the direction of main trend, followed by 3 waves which are in a corrective wave. This 5-3 move then becomes two subdivisions of the next higher wave moves. The underlying 5-3 patterns remain constant under the time span of each wave may vary. By the example that will be shown on your screen, we easily understand the interpretation of wave patterns. As you see on your picture on your screen, there is a wave pattern that will be uptrend, and we easily see that each impulsive wave is count by 1, 3 and 5, and all corrective waves will be identified by 2, 4 and A, C. It means that by this help of this wave pattern we can easily identify the price movement. We can also get a forecasting tools used with Elliot wave to identify the future price targets. If we ascertain only the first and the second wave, we easily ascertain the third and the fifth wave in advance. It means at the point of wave 2, we are fully confident that trend, price targets and the future price movement of that stock. As we already discussed that Elliot is also considered the crowd psychology, then by the help of this example, we can easily understand the implication of mass psychology and the trends or Elliot waves. So as the picture show on your screen, you can easily understand the crowd psychology that will be prevailing in the wave pattern. Let's take the example. Was the first move that is considered by first wave is called as, in our terms it is called as primary wave. The primary wave is much more useful for accumulation of the stock at absolute bottoms. The value investors are the basic trading strategies that is used in wave first. The wave second is considered to be the profit booking by the short-term players. The third wave is considered to be the impulsive wave, which is used by the positional traders. The broking house and the research firms, institutionals use that third wave for their price movements. The fourth wave is again a correction done by the intermediary or a positional traders. The fifth wave is considered to be the exhaustive wave, and it is start the public phase. It means most of the novice traders and the public traders, public phase, the public participation is much more higher in fifth wave, but it is riskier also, so that the intraday traders use that fifth wave for their trading strategy. When the fifth wave finish up, the price will move at their absolute top, and it is the best opportunity for the value investors who are entered into the wave first. So the ABC wave is wholly a profit booking of value investors, that they are entered into first or a third wave. So this is a whole mass psychology that is involved in the wave pattern. The most important part that you have to consider is the ABC wave never breaks the fourth wave. If the ABC wave breaks that fourth wave, then the wave pattern is complete, and it started the new waves in the downward trend. If the ABC wave sustain above the fourth wave bottom, then it is a born of a new wave. That means a mini wave of 1, 2, 3, 4, 5 is considered to be the first big wave, and the ABC wave is considered to be the second corrective wave. That means we enter into a big cycle and the price will move to a larger extent. As we see, there is a mini wave and the larger waves. By the help of this example chart, you can easily understand the concept of mini waves and larger waves. The longer wave example will be shown on your screen through an example chart. We easily understand that the first wave that we consider, it is an inclusion of mini waves of 5. The first, second, third, fourth and fifth positive waves will be considered to be the first wave in the longer term. And the ABC wave is considered to be the second corrective wave. Again, there is a first, second, third and fourth, fifth waves that is considered to be the third wave, and ABC wave to be corrective waves. By the help of this example, you can easily understand that how the mini waves will be considered to be a longer waves. In a simple example also, we consider that if we draw a wave pattern on intraday charts, then that same pattern is considered to be in a daily or weekly charts as a longer waves. The shorter waves will be intraday charts and the longer waves will be weekly or a monthly chart. Now, before finalizing the Elliot wave pattern, we have to consider some key rules. The first rule, the waves 2, the corrective wave, never retrace more than the 100% of wave first. It means the first wave, the second wave is never be more than the first wave or go below the first wave. Then the trend will be reversed. The end of fourth wave never overlaps the orthodox end of wave first. That means the fourth wave corrective wave never enters into the portion of first wave. That means the fourth wave bottom never go below the first wave top. Only the first, third and fifth waves, the wave 3 will be the shortest wave. It is usually the longest one. Many of the technical analysts always prefer to enter into third wave because third wave is the longest one and it will take a less time to move. The ABC wave never go below or above the wave fourth wave, bottom or top. Otherwise, the ABC wave is considered to be the first primary wave of a new trend. Always identify the Elliot wave from the absolute bottom and top. It is the same rule that we are considered for trend lines or trend analysis. It may be a 52-week low, it may be a 30 days low, or it may be a week low. Always consider the Elliot wave pattern or start the Elliot wave pattern from absolute bottom or top. All corrective waves have low volume as compared to all impulsive wave. That means mass psychology participation will always happen in the impulsive waves, and the profit booking or distribution will be done in corrective waves with the low volumes. So I hope you understand the Elliot wave concept, which is very important for ascertaining the valid support and resistance line. Elliot wave has also become a powerful tool for forecasting the future targets. If we consider the first and the second wave, we easily consider the distance of third wave. That means at the very rise of the very basic wave pattern, we can identify the longer waves. Thank you.